Hello and welcome to this Finextra webcast, Sepa Now, Sepa and International Payments in 2011, sponsored by Experian Payments. I'm Elizabeth Lumley, I'm Special Projects Editor at Finextra, and I'm joined today by Hans-Jörg Nymphus, who's Chairman of the EBA and Director, Global Transaction Banking Product Management, Market Infrastructures at Deutsche Bank. Also with Ruth Wanderhofer, Head of Payment Strategy and Market Policy in the EMEA region for Citi Global Transaction Services. Also, we've got Michael Berkey, who's Market Development Manager, Treasury Services in the EMEA region for Bank of New York Mellon. And also joining us is Jonathan Williams, Director of Strategic Development at Experian Payments. Now, we now have end dates, sort of, for 2011. We're in the Sepa era. So as we look at Sepa in 2011, what we're looking at now is banks and their migration plans and where the industry sits now. Hans-Jörg and Ruth, you're big on the speaking circuit with Sepa, and I'm sure both of your banks are on the ball with Sepa migration. So I wanted to talk to both of you about how has this promise of end dates influenced Sepa projects at your bank? And Ruth, I wanted to start with you.
Yeah, I think the first most important thing is that it has rather than influenced Sepa projects in our bank, Sepa projects at our corporate clients. Because obviously we've been ready with Sepa Credit Transfer in 2008 when it was launched as a scheme in the market, and 2009 direct debits. But many customers, and particularly corporates, have really been waiting for the certainty as to when things really migrate from the domestic legacy to the new world in Sepa with XML and ISO standards. So from that perspective, we of course are very interested to have a clear cut-off time so that we can work with our customers to give them a project timeline to implement those customers in terms of their connectivity.
So, I mean, do you agree with Ruth that, you know, it's more the looking at clients' migration?
Yeah, well, it's similar to what Ruth said. Deutsche Bank was one of the early movers in the whole project from the early days on. And so technology-wise, even with the first customers, we are live on both circuits, on the credit transfers as well as the direct debits. But yes, the corporate market specifically was waiting for the final cut date so that they can plan it in their business cycle. And that is what we hope that this regulation, for example, will eventually bring us, so that then the discussion in the shops of the corporate also is, we have to do it. It's not something we can push around anymore. And therefore we get more move in the market to move to actually what Europe should look like eventually in this payment market.
So moving on to sort of the industry as a whole, I mean, of course, Deutsche Bank and Citi will be, you know, on the ball with Sepa. Talking to you, Michael, it's a lot of people talk about this lack of incentive to push for Sepa. Now that we have this promise of end dates, has there been any fires lit under projects in the industry as a whole?
Yeah, I think they definitely have. If we just look at this from both sides, let's look at it from the banker's perspective. We have two terrific institutions here, very well prepared, very well set up. I would put it forward, actually, that there's actually quite a number of institutions out there who have been waiting for this announcement. And they definitely do have fires lit under them.
That was the purpose.
They definitely do. Yeah. So they are viewing this very much as a banker's issue. It's their problem. They have to be compliant. They have to meet the end date. I think in the whole discussion, a very key group has been not necessarily forgotten, but possibly ignored by some, and that's the small to medium-sized corporate entities. Not the major corporations that your two banks work with, but the slightly smaller ones who may just be dealing with an account manager on an ad hoc basis. They aren't getting any communications in terms of the implications to them as a business of what they would have to do to be able to enjoy some of the benefits of Sepa. So there's a dual fire under most banks now. A, that they have to be compliant, and then B, what do we do to actually go and make sure our customers understand that we may have to charge them a little bit more for some of the existing services that they will get under this new regime.
I mean, is this it? Are the corporates going to the banks, Jonathan, just saying, we want education on what's going on, or is this being pushed from the bank side? I mean, who's demanding?
I think it's a mix. Certainly the larger corporates tend to be better educated about the whole SEPA program and the requirements, specifically some of the technical requirements mentioned in the regulation. The smaller businesses, as Michael said, don't tend to be as well educated on the whole SEPA problem. However, it's not just the corporates, it's also the citizens, the retail customers. We were speaking to a business recently that collects money into Euro accounts all the way across Europe. And without the education of those consumers as well, that they can make cross-border or historically cross-border transactions as easily and as cheaply using SEPA between countries as they can within the same country. Until we get that education out there with the retail customers, they will be unwilling to make those sorts of cross-border transactions. Who would have thought that it would be as simple and as cheap to make a payment from Germany to France as it would within Germany? And that's what SEPA brings us.
I mean, are there any... I remember last year there was a lot of talk about patchy migration and patchy take-up. Are there any numbers January 2011, are there any numbers, Hans-Jörg, about where we are as an industry with
Yeah, I mean,
migration?
as an industry, we are early beginners. I would say the numbers that we see on the volumes is below 10% in the SEPA world on the credit transfer side, and direct debit, forget about it. It's very chosen bits and pieces here. So the numbers are probably not the real indication of what's happening, because like been said before, the large corporates already been preparing for this, and some are even made the moves and started using the instrument, but they find out that's a slow migration on the other side of the chain, so to speak. When it comes to the retail customers, picking up on that point, I think it's all on the banks, because the front end that these customers use, it, be it paper or be it electronically, is all provided by us banks. So either we banks give them the tools or nothing will happen. The middle ground, we have that famous German word Mittelstand. There you have actually two slices, I would say. You have the upper end of the Mittelstand, which really is well prepared, either through their own ERP providers or through associations that help them do this. They have outsourced the financing and all that and given it to those companies. Datev is a company in Germany, for example, that does that. The lower end of that market, that's where I see it a little bit tricky, because some of them kind of work off the back of a spreadsheet. But then again, I think here the banks are in demand to provide what they need. And they did that in the past. We did provide electronic banking, online services. We provide the respective statements, account statements with the informations. As long as we provide the right tools to those customers, I think they stand a good chance to make the migration dates. So the banks have a high responsibility in information and in providing tools.
If I may come in there very briefly, I completely agree with what you're saying. However, the banks, as you refer to them, are facing a very, very difficult financial situation at the moment.
True.
I don't think there's a single bank that isn't constrained in some way or shape by its increased solvency responsibilities. So therefore there's a tightening of the budget, less appetite, apart from the fact that it has to be done because it's a legal requirement. But as a backdrop, there's a decrease in the margins. There's a margin compression that's going on, which I'm sure your institutions are experiencing right now, where the cost, as you quite rightly pointed out, is becoming extremely cheap. It's almost becoming free. So if the scenario goes to free banking, shall we say, free payment transactions, the incentive for banks to do this themselves becomes even harder to justify.
I mean, now we obviously opened up three different topics at the same time. I was just going to come back to Hans-Jörg briefly on the data, on what numbers we see in the market. Because I think some of the statistics that obviously the ECB collects in terms of the clearing mechanisms that are SEPA compliant do indicate fairly low percentages. 10% was the case on credit transfers. I think we have to also be quite mindful of some of the bilateral clearing, which is obviously interesting in the German context, because one of the peak days of EBA was 5 million credit transfers per day, which is on aggregate a quite small number compared to the trillions of transactions we have annually in the European Union. But at the same time, a German pension processor for the German Pension Ministry payments had actually 5.5 million on that same day as one user in the bilateral environment. And it was not the classical bilateral clearing under old standards. It was actually SEPA compliant bilateral clearing, which is one of the 5 options in the clearing environment. So I think some of the figures we see in the public domain are misleading, and we haven't actually looked at all the bilaterals, because obviously they're bilateral and very hard to trace. from that perspective, the public sector migration initiatives that have been kicked off in a number of Eurozone countries already are quite remarkable. I mean, the German case is a case in point, but also we do know that France, for example, is migrating quite a lot of transactions to SEPA credit transfer, having started already last year and pushing this through in 2011. So we will probably see an uptake of up to 40% domestically in France, moving from old to SEPA credit transfer. So again, I think it's kind of the little things that on aggregate will give quite a large number. In terms of the accommodation of SMEs and connectivities, I guess until this point, we've enabled corporates with XML mapping solutions from their ERP standpoint when we look at the larger users. And the big question is always, what do you do with the SMEs? You've got the sort of paper-based SME that would probably do one-off payments or would have an online banking solution. And then you have the SMBs with proprietary ERP systems, where, of course, these system providers would need to get onto the SEPA standardization track to enable their customers to make those changes. And I think this is totally a call to all of the sort of IT providers to also get involved into those technical discussions, because arguably the SEPA point was out there for many years. It was effectively launched in January 2008 already with the whole architecture in XML that comes with it. So it's maybe not fair to say we didn't know about it at all. It was already there, and obviously our banks, for example, did implement that fairly swiftly. I think there was a call for the majority of banks to implement XML consistently and to take customers with them, and this has not happened at a large scale in Europe.
Ruth, and I'm sure you'd want to say some comments about the role of services and solution providers, but just before that, a call to what benefit?
Well, it's integration of the European payments market. It was a political objective.
That's a political objective.
Yes. Which the industry supported. So.
Well, again, the industry now has to pay for it. I don't think you find the support there.
Yeah, but I wanted to go a little bit into what Michael was talking about, because we're gonna go into more detail on data and clients later on. Yeah. Sort of slightly related to what you were talking about, the economy. I mean, SEPA was sort of developed in the happy days of the economy, in the happy days of the euro, and now we've had Ireland and Greece and possibly Spain. How has this changed? Now that 2008, the ground zero for the credit card crunch, how has this affected SEPA in 2011?
I think it ties into the earlier question that was raised. I think those that made the early move, like the institutions that we just mentioned, they are better off because they have their vast investment behind them, and it's more like going out and take their customers by the hand and help them to move. Those that have waited and waited in the hope that SEPA never comes, or comes in 20 years or in 50 years, yes, they hit it now. They hit the thing twice, because the crunch of the markets, the crunch of the margins, and at the same time I have to do the investment because it becomes a compliance issue. So there is a problem, but those that had moved early enough and had prepared themselves well, as much on the banking side as on the corporate side, I think they can master it.
Yeah, but it's as much of an opportunity as a problem.
Sure.
We take a view that the banking landscape is evolving towards what we've termed a manufacturer or distributor role. Mm. And I think this will accelerate that, certainly in the Eurozone, where institutions like yourselves, you have the wholesale capacity to be able to provide and to continue to maintain Eurozone services. Smaller institutions across the European landscape will suddenly think, actually, we need to find somebody to do this for us.
That's exactly
we may have wanted to do it ourselves, but we don't have the technology. We may not have the budget to go to technology providers for the solutions. So why don't we just outsource this whole requirement? And I think that there will be a stampede eventually.
Yeah, and I mean, to that point, that's the offer that we have made from Deutsche Bank for long years now, to say, and we also always mention...
You might now get paid for it.
Yeah. We will, because otherwise you don't sell the services. That's a simple thing. Yeah?
It will turn up.
But the point is, we had told in the market for many years, you have to come up with your own strategy. You have to think about, is this really your core competence doing it, or you better give this service and buy the service somewhere else where you get the best services and you don't have to build your own machinery and like that. Now people have to come to a final decision. What is it that I want to do?
I think, I mean, the euro introduction itself was already an indicator for harmonization and resulting efficiency, scale, and competition in that space. And so arguably the call to the industry after the euro was there to say not only high-value payments with Target and Target 2 and Euro 1 should be centralized and harmonized in sort of one set of scheme rules, but the low-value space with all the legacy should move to the same level and preferably in a more modern standards environment. And that's exactly what we're now seeing it hitting us a little bit more tangibly, because many people, I mean, Citi was one of the drivers of European harmonization in that space, and we believed in it. But of course, we had to take a market of 8,000 institutions with us on that dream. And within the EPC, we defined the scheme rule books, did a compromise which was very hard to achieve. And arguably, some of the details in terms of what you need for a domestic environment, is Sepa reflecting all your needs? These are still debates that are potentially to be had in the future. But at least we came to a certain point where we said, this is what we have until this point. Now let's migrate. And many banks, out of the mass of banks, of course, have said, well, let's hope it's enough from a regulatory perspective, because we've seen pricing regulation coming along in 2001. It's been repeated now. It was repeated, is even repeated in the securities environment. So pricing regulation becomes something rather more normal for the European markets. And coming back to your point, it's commoditization of payment services. And therefore, of course, you will look for the most efficient way of handling the problem rather than investing millions and create the wheel yourself again.
What if, for example, the legacy environment continues? So
Well, see, that's what I was going. I mean, sort of to round off this section. I mean, if we've got SEPA credit transfers in 12 months and then direct debit soon after, are we heading towards a big bang? Is this?
Well, I think it'll be big bangs. There'll be two, or probably many actually. I think mini SEPAs are already in place. Or if they're not in place, the domestic political and economic drive in many countries is saying, yes, SEPA, great, yes, we will tick the boxes and we will comply, but we're still going to do what we do. It's only if the EU has the political appetite to ban and close the domestic systems and say, on date X, you will stop. Which goes back to your comment about some of the European countries who are having some difficulty at the moment, whether they would actually want to do that. So,
from a behavioural point of view, I mean, I think we're also possibly encouraging not good behaviour. We've managed to allow those organisations that haven't invested heavily in SEPA to get away with it for a number of years, and the fact that we now have this regulation which is forcing them to invest, to convert, to turn off the legacy systems is a good thing. If they were playing the good game of saying, well, we're not going to invest, we'll toe the line, do the minimum necessary, unlike those institutions represented here, then they win out. We don't have to pay twice for our legacy systems and our new SEPA systems, and therefore we win out in terms of our investment strategy. That's not a good thing for regulation going forward.
So yeah, talking about legacy systems, I think this is a good point, because I think this first section we can talk about all day. But I want SEPA. But I think I really want to move on to what I think is probably the biggest issue in banking. Never mind SEPA, which is data, which is the issues with data. I mean, because it's really easy to get bogged down with politics but once the SEPA end dates, once SEPA becomes mandatory for cross-border payments, we have the IBAN. They'll have the BIC, the bank identifier codes. Everyone needs to be using ISO 20022 XML standard, which is more secure, but it also requires bigger bandwidth, larger data fields that the legacy systems might not be able to handle. I mean, Hans-Jörg, how big a problem is this data legacy system issue? And is the industry aware of, if it is a big problem, is the industry aware of it?
Let me cut that question in two parts, or the answer, better to say. On one hand, we have to look at the systems between banks, what banks are using in between. And I think here the issue is very much discussed and nailed in a sense, because everybody is aware what it means to send XML data through the clearing channels, the bilateral channels, or whatever channels they use. And there is no way out, you have to use it. And it makes sense, that's what the whole thing is driving for, that we have a common standard, harmonized way to communicate in Europe among banks, period. Different view when you look at the customer-to-bank environment. First of all, I'm not convinced that it is the right move to force all the customers per regulation onto XML, because there's very good reasons why customers don't use XML even today, rather go into meta formats. If I look at the large customers, because they send us payment orders not just for Sepa, but for the large value payments, for foreign countries, global payments, all sorts of specifics. And therefore, they're using things like EDFACT or other standards. IDOC is another standard that allows to have this kind of meta information. Here, I think the regulation has to step back a little bit and say, as long as the market is healthy and can manage these different formats and also manage the cost of those conversions that are in between, then let the market decide which way it goes in terms of the formats. As long as the data content is there to fill the XML in the middle, as I described bank to bank. When it comes to the smaller corporates, back to our earlier point, they probably have to move from the legacy format to the XML simply because the legacy format doesn't cater for all the data requirements that are there in the regulation, be it extents of content or be it new fields that hadn't been in the legacy. And here, I think, is the lever to make sure that legacy formats and therefore legacy schemes don't survive. As long as we make sure that we demand the full set of data content in this transfer between the customer and the bank as a content, not necessarily as a format, but as a content, then legacy systems have to move out, or a market thinks they have the money to expand it to become XML-ish, and then I couldn't care less because then we're back in Sepa. But staying where they are, as long as we demand the full set of Sepa, like it is put down in EPC rulebook, then I think we stand a good chance to get away with the legacy.
I mean, demanding the data and getting the data are two separate things. I was going to you, Jonathan. I mean, what can be done to make sure the content is correct?
Well, it's interesting to note that the moving to a single standard XML for corporate-to-bank communication will make things, to some extent, a lot simpler. Banks invest a large amount of money in supporting the different formats that the systems operate. But actually, one of the things which is going to really help is getting these solution suppliers on board. One of the things that made the Euro migration as successful as it was, and the thing which notably increased the migration, was actually getting solution suppliers to support Euro fields within their ERP types of application. However, that's still not going to solve the problem of poor data quality in existing systems. We've done some research recently on data conversion service we provide to corporates. And what's interesting to note is that on existing domestic payments data, error rates can be up to 13% on average across the European Union from the statistics that we provided. If those data are incorrect, they're somehow being coped with by the legacy systems at the moment. If that data was just simply converted across to SEPA, IBANs and BICs without any validation at all, you're just going to pump bad data into good systems and end up with errors. And that's the real concern associated with actually migrating those corporates across. We might end up with a tsunami of data errors and exceptions on the first day of the new world having migrated away from a domestic system.
But I mean, are there any provisions for correcting this data in Sepa, or is this?
Yeah, maybe just starting again with your question, because you mentioned Sepa as a cross-border requirement. Sepa is a requirement for domestic and cross-border already today, because it's a cheap way to transact cross-border if you want an alternative to high-value RTGS-type payments. I would kind of just go back to the, I mean, there are multiple elements to this data discussion. The first one is, of course, that the XML compared to the empty messaging environment requires more data space in computers. That, of course, means that clearing mechanisms that want to be SEPA compliant need to be more resilient and have much more megabytes inside of them to be able to transact those things. And although we know that not only banks, but also clearing infrastructure providers have been waiting for the day the final SEPA sort of hoses are opened and all the SEPA transactions flow through them, they have to actually prove themselves, one, that tsunami comes, to actually be able to transact just from a megabyte perspective, because it's much heavier traffic than before, which is of course down to the advantage of using a standard that enables much more information to be carried between banks and providers and customers, and therefore helping corporates in sending and receiving reconciliation methods. So that's one of them. On the other one, of course, in the IBAN context, people are aware, even since 2001 with the euro introduction and regulation 2560, that one should have an IBAN if one would like to make a very cheap cross-border payment in euro, up to, at the time, 12.5 and now 50,000 euro per transaction. And so not only consumers did get IBANs printed on their account statements since the early days, but also corporates are very aware of IBANs being the requirement. I think when we get into some other client segments, for example, public sector, you would be surprised, and that's very much in line with Jonathan's comments. For example, a Spanish pension ministry will have quite some issues with local account data. That's because it was collected over the last 30, 40 years. No one has really checked the account data again. Some banks might not even exist anymore, so the banking code or sort code, as it were, is kind of not valid anymore. And that sort of validation before you even go to the next IBAN level as opposed to the local account number hasn't really been done. And this is what some countries and some institutions are experiencing in their slow migration to the new IBAN data set. For the corporates, I would say the top tier corporates, I mean, most of my customers already are IBAN ready, and they've done that in the last few years because we kept telling them, if you use the IBAN, whether it's for Target 2, Euro 1 or any other cross-border thing, the IBAN is required. That on that side. I think there's another dimension on data and technical barriers or even legal barriers when we look at central bank reporting. And I think it's maybe worthwhile mentioning it here because, as we do know, a regulation has been now proposed by the European Commission in December as a proposal. It will be decided by Parliament and Council on what happens with it. But this regulation, which is an amendment of Regulation 924, which already deals with cross-border credit transfers and direct debits in euro, hasn't included a removal of central bank reporting, which until today is a clear barrier to SEPA, because it means that in a number of countries, and particularly technically within Spain, if you're using a pan-European clearing mechanism and you're using the Sepa environment and you execute a payment higher than 50,000, suddenly 2 Spanish residents are being required to report as if they were non-residents. And I think this is a very important ask in any regulation now being proposed to accelerate migration, to actually get rid of central bank reporting for euro in the European Economic Area, because we are a single market without barriers.
I mean, how do you think that'll happen, or is it?
Well, we're going to propose it,
Okay.
of course. It's one of the emissions. It's a critical one because many governments wanted to keep their statisticians busy with central bank reporting, but within the single market, there's no rationale to require cumbersome paper-based reporting, either for customers or for banks.
It's interesting to note that when we started off the SEPA proposition, the SEPA program, it was really centered in the interbank space, whereas this new regulation actually extends into the corporate or customer to bank interface as well. So we're looking at SEPA standards, the XML, IBAN and BIC, which have previously been payment service provider to payment service provider, now being mandated in that link as well. So it seems to be extending the scope of SEPA slightly, or at least maybe extending it to where it originally should have been.
I mean, I wouldn't go all the way with this statement, because on one hand we have told our customers from the early days on, this is going to be the new data content. IBAN, you have to have it. BIC, you have to have it. You have to enlarge your databases so that you can store this information. Be aware that the reference information is going to be wider than it has been. It has been a demand from the corporate market for long. So from a content perspective, I think most of the corporates should have known for long. Where I'm with you is the new move to say everybody has to send it in XML. And like I said earlier, I'm not so convinced that this is the important part.
I wanted to get back to that. I mean, especially for smaller corporates. Should you mandate XML? I mean, would that be possible?
Well, you'd have to completely change all the terms and conditions of all the accounts. So virtually every account in the Eurozone would have to be re-signed and re-agreed. I don't think that's technically feasible. I don't think the banks have the capacity to be able to go to each of their customers and say, we now need to include this. They could do it. It could be done. But right now, I think it's fair to say that bankers are not exactly the most popular professions on the planet. And to go, albeit to be the implementer of a political decision, would not be a very popular thing to do right now. Economically, certainly the small to medium-sized enterprises are going to look at the request and say, and why exactly do I want to do this? What's in it for me? Why am I going to spend money on changing my computer systems and sign up to another bank's agreements when I have no need to do this? When I can carry on using my systems as I do today. So you'll end up with a dual, in my opinion, you'll end up with a dual track. The large corporates, absolutely, they will be on it straight away because it'll help their treasurers, it will help their financial forecasting, it'll help them with their fees, the transactions, the cost of those transactions will plummet, and they'll get better liquidity solutions, all of the above. However, at that second, third and fourth tier level, it's a big question mark. If I was a CFO or the financial director or even the CEO or the owner of a company, a small to medium-sized company, the first thing I'd say is, and my return would be what?
Yeah. But if there's error rates from that scenario that you talked about. I mean, who's at fault?
I think, again, there's multiple things in this discussion. The first point is, of course, if Sepa happened 5 years ago, I think we could have gotten away with it all right. So arguably there's an economic implication on how the market is functioning today and the role of the euro, and that's another topic altogether. On the SME point particularly, I think the Commission tried to be helpful to not only recommend end-to-end XML, which is what we've done in the Sepa EPC context, but to actually say everyone has to do it. If they send bundled payments to a bank or payment service provider, they have to be in XML. Now, the whole understanding of how technically things working are not necessarily things that the regulator understands 100%. So there's certainly an element of educating the regulator. And given that the Commission did not consult the Payment Systems Market Expert Group or the Government Market Expert Group in the last year and a half, but just issued a proposal after they've sort of come to a compromise internally during summer, which is the Are We Clo Commission, as I call it, is their mistake, not our mistake. So there is certainly a technical need to explain things, and there could have been very good arguments for a hybrid solution that would have targeted the right client segments in terms of getting end-to-end XML and would have made sure that other customer segments have other alternatives in terms of solutioning it. And in fact, some communities even say that these technical requirements in terms of customer-to-bank XML are ambiguous and could be interpreted in a way that the bank can still offer solutions to accommodate that. So I think we are just at the beginning of a conversation and an education of the European Parliament and Council to make sure that this is all understood properly and wouldn't result in disproportionate investments. As we said, it is clear that the large corporates with the more streamlined ERP standards will get mapping to XML as we already do today. There are SMEs that do paper-based, which is not a problem. And then there's the sort of gap SMEs where in some countries like France and Germany, you've got multi-banking gateways which offer the solutions end-to-end. And you've got other countries that are missing this. And I think it's very important that we as banks help those types of users which have not necessarily been involved enough in the discussion to also fight on their behalf and get to a compromise that would not mandate customer-to-bank XML in that way. And as Hans-Jörg said, we send files, corporates would send files with lots of different payments and lots of different standards in the payments, and a bank would usually siphon off whatever is SEPA to go through XML, keeping in mind that international payments or high-value payments are still done via MT and other sort of messaging formats. I think the point on Target 2 and high-value payment systems itself is important to note here. The ECB has now come to the conclusion that, of course, their Target 2 system shouldn't be considered under the regulation in the scope, because the scope was widely drafted. It was initially ECB and Commission drafting it together, and it was fairly unclear why they suddenly include all euro credit transfers and direct debits. And the ECB very recently, in January, has confirmed to the industry they would agree to get exclusion from this requirement, but they wouldn't like to make the point themselves, given that they don't want to be seen as a non-ISO endorser, because they obviously moved Target 2 Securities to ISO by 2014. So it will be relevant and important for the industry to make the point that high-value payment systems are not captured, because they are already harmonized, as we discussed previously. There's no need to do that. And clearly the customer-to-bank XML is technically nonsense, not only from an investment perspective, but even practically, because you have other standards you have to cater for.
Actually, if I may add to that, if it stays as it is, and I'm still hoping that we get changes here in this area, but if the requirement stays that the customer-to-bank has to be XML for those bundled payments, then I think it actually endangers an early migration end date. Because the typical investment cycle in a corporate market is at least 2, typically 3 years. So you get to know it today, you plan ahead for the next year, and you implement it the following year. Now, if we want to have credit transfers in 2013, we're already in the middle of that cycle. And therefore, and on the other hand, I don't think it is the really driving piece to make Sepa happen. And therefore, I hope we can convince the political arms that they understand with having the necessary data available, it doesn't matter how I carry it to the bank. It matters what I do between the payment service providers, banks and others, that this is harmonized completely and at day one of the Sepa. But everything outside is a market forces development. And if I give a corporate a year more time to make his move to the XML completely, why not? There's enough service providers in the banking community as well as in the software market to provide those conversions and do a great job on that. I mean, even to do data validation before it even gets to an XML. So here I think we need some changes, because otherwise it's counterproductive to the idea of an early migration.
I think you're making some really good points there. However, if you notice the last few minutes we've been talking about very much existing legacy environment. Sepa does, in my opinion, represent a terrific opportunity for new business going forward, for both banks and for corporates to be able to say, terrific. So I could actually now reach a client base right across the European continent.
Excellent.
And provide them with a product. You, my bank, you can collect the money for me through direct debit, and I've suddenly gone to market with a new revenue stream. That's a terrific, and that's a conversation which many of our clients are having with us. How can we use this? So they're almost in two minds, where they're saying, let's worry about our legacy. At the same time, let's worry about some new business to help pay for what we have to pay for the conversion and the compliance. So it does have an upside. But it's again, I think, in my opinion, it's not being communicated clearly to many of the business segments. I imagine if you went and actually asked an average chief financial officer, particularly an international one who has operations in Europe, and said, do you realize your subsidiaries are liable for some increased revenue spend to be compliant, he or she would turn and say, no, I wasn't.
I'm going to let Jonathan pop in, because I know you've been jumping up and down, and then I think we're going to move on to the client, move on to the migration. So
certainly, I think there's a question of education for the users about what the real benefits of Sepa are. Certainly, we've been speaking to corporates over the last 7 or 8 years about what Sepa really they think means to them, and to a large extent, the first answer is lower costs. They don't see the upsides of being able to do business all the way across the European Union in a single standard, making payments all the way across different country boundaries. And so there's a challenge of being able to correct that. I think we as a payments industry haven't been upfront that actually Sepa may not be cheaper in the short term than the domestic systems it looks to replace. It certainly does place a challenge on those corporates to get their data right. I think we as a payments industry need to provide the conversion services both for data and for the XML files, if that's what the regulation will say, to enable those customers to minimise their investment in the short term and comply with those Sepa compliant regulations.
Maybe one point to your comment. I mean, the customer-to-bank XML mandated suggestion only came out on the 16th of December. We did see some sort of leaked, WikiLeaks drafts of the regulation throughout summer, which clearly helped the market to adjust a little bit the expectations. But this was never intended from a regulatory perspective initially, and we were all quite surprised when we had the first WikiLeaks that customer-to-bank XML would be included. So I would say that this is one of the reasons why we waited for the formal proposal on the 16th of December. And obviously now I already communicated to all the key corporates to tell them this could be a risk, but we're going to help negotiate this out. And we would like you directly to participate in the discussion. You would want a large global corporate to actually write a letter to the Commission and state the case. We have some top-tier clients that obviously have switched to XML architecture globally, but this is not a trend that has yet been in such a short time frame been replicated by the last 20%, the top 20% of corporates. So this is certainly one of the points. In terms of SEPA and the cost and the benefits, the global corporates do very well realize that they have an ability to pay from one location and collect into one location, which is the whole payment on behalf of model. It's the reconciliation advantages, and it's the whole receivables part to have direct debits that you used to locally collect with every national format and bank account to centralize that and optimize your liquidity. And we're having these discussions for many years, and some customers have implemented with other solutions that we've as Citi provided, because we kind of try to seamlessly integrate markets with a middle layer that we provide ourselves to aggregate the flows at the end of the day. So that there are other options that have been out there in the past to make it seamless for customers, even though we didn't have payment harmonization. And now that SEPA is offering the opportunity, we would of course like to do it streamlined end to end, so that of course we can also consolidate clearing connectivities and country formats into one of the formats. So that is happening in parallel, and there are business benefits which are really large, but people would like to, for example, collect across all the Eurozone into one location, and there we end up with legal issues. If we look at the German case, which is still not solved because clearly mandates in the legacy scheme between consumers and corporates cannot be migrated unless all banks in Germany agree to change their terms and conditions, which clearly some of the industry has been opposing until this point. So I think there are issues to allow actually what we theoretically elaborated as a standard and kind of communicated broadly to the market to actually feed through, whether it's the central bank reporting or the XML point. That's the problem we're facing.
But what you're implying, therefore, is that the end date and or terms and conditions may change.
Well, I mean, the whole point is that because Germany has not decided to embed a validity of existing mandates of consumers
so there's a mini SEPA there already.
Into the Payment Services Directive. The Payment Services Directive was the opportunity for every country that had a legal problem with the SEPA direct debit mandate to say, dear all, we consider the existing mandates with consumers as valid under SEPA direct debits.
And how many objected to that? How many
No, and all countries, Ireland has done it, Italy has done it. So all the countries that had a legal issue have implemented into their Payment Services Directive in terms of national transposition, apart from Germany. Now, Germany has the largest part of citizens and very large corporates, insurances and any other sort, which of course are still facing this uncertainty. And that creates a systemic risk, because if Germany is not solved for the migration, you have a problem. You obviously have other little problems here and there, but this is one of the key ones.
Yeah, but let me kind of give you the latest sort of view that we have in Germany to that. Yes, this opportunity has been missed, but in the meantime, last year we got High Court decisions that implicate now that if the financial community agrees to accept the existing mandates as being SEPA compliant, then we will have resolved this. Yes, there is still some areas in the market that oppose the idea, but we personally believe that this is going to be resolved in time for the customers so that SEPA, also the direct debit side, can start.
We're moving into customer talk now, which is good. So we're moving into that section. You know, and I wanted to start with Michael and then go around the table about. We talked about that large multinational corporations understand the benefits of cross-border payments. That's understood. Now they're starting to look at what this means for the domestic schemes and also smaller corporates. So taking aside, sort of, let's take the large multinational corporations, cross-border payments out of the discussion. Who benefits from SEPA, and are there firms that will be forced to migrate to SEPA that won't see any benefit at all?
I think, yes, I think that's a fair question, and the answer to that is definitely. Some will not see a benefit, because they're purely domestic. Yeah. Unless there's a complete harmonisation of domestic banking fees right across the entire Eurozone, so that an account being serviced in Spain will cost you the same as an account that's being serviced in Sweden, it's unlikely. So you will always have an uneven landscape. As far as the benefits to corporates, they will be exactly what we just said in terms of searching out for new markets. They will quite naturally see the price compression, which they've seen already, almost down to nothing, which is fine. They're happy with that. Where I think they are going to really struggle with is how much is the conversion and the compliance going to cost? And they will turn to technology providers like yourselves and be able to say, absolutely, they will come to you, but it's all added cost. There is, it's arguably, whether we're still in a recession or out of it, I would feel very, very uncomfortable having to go to a finance director and saying, you now need to allocate 50,000 euros or whatever the figure happens to be to do this, when you quite clearly they would rather have spent that on something else. So we need to be really, really clear in terms of the benefits to the vast majority. Not everybody will benefit from this. That's quite clear, and we accept that. But we need to be able to, as an industry, go to the marketplace and say, if you come to us as an industry and use these services, these are the benefits you could possibly accrue. I mean, no doubt you're having that conversation with the major corporates because you're pushing against an open door. I suggest that there are many clients out there in that small to medium space that haven't even heard of this yet.
I mean, moving on from small corporates, I wanted to ask one more question about sort of the retail customer, and then I wanted to get all your views about the future. So, I mean, we looked at the large corporates with the small corporates. What about for the retail customer? What about that sort of that story people talk about, that a German has a holiday home in Spain? That we try. How does that get communicated? Yes. How does that community? How does that?
Maybe he's one of them.
How does that get communicated to the retail?
Yeah. First of all, I don't have a holiday home in Spain, so I don't have the problem. I think for most of the retail customers, and for that I would call them the men on the street.
Mm-hmm. Or the woman on the street.
Or the woman on the street, yeah, equality here. There's no change for them. Mm-hmm. Because so far, I think what the banks had achieved in the legacy world, as much as I think they should achieve in the SEPA world, is shield the people from the complexity of the technology and the things behind it. Mm-hmm. The customer, what he cares for is the money has to move in time, correctly, no errors, and at low cost, or low price, let's put it this way. As long as we provide this to the retail customer, I think the only thing that they eventually realize is that it doesn't matter whether they send money from Frankfurt to Munich with an account number and a bank identifier, old style, and now a new style, they use the IBAN, and suddenly that IBAN opens the door to make that same payment into Rome, Barcelona, or Helsinki. So it's no change. I don't need the term foreign payment anymore. But that's how many foreign payments does a typical private person have? 2, 3 a year? It's probably high end. So in other words, the retail customer, the best we can service them with is make them not feel any changes.
Well, yeah, I wanted to end up, because I really want to ask all of you a future question. I'm not even going to get into eSEPA and mobile SEPA because there's too many political tensions that, what's going on. So I'm going to start with Jonathan. I'm going to go around. Not 10 years from now, not 20 years from now, what does the European single common market look like in 2015? Where do you think we'll be?
I think it's inconceivable that SEPA, by that point, won't be at least the vast majority. I can't see that we're not going to pass the resolution to actually put the SEPA credit transfer and SEPA direct debit end dates. So we will be in a proper, full SEPA world. I still think there will be businesses out there who are maintaining their data in legacy formats and will need conversion services and will need help getting their data into the right format to be able to submit into the clearing systems through their banks. So we'll still not be completely converted, but we'll be pretty much there.
So Michael, 2015, will we still be in the grace period of deadlines, or where do you think we'll be?
I think that's a constant state of being in the European Union.
Grace.
everything that Jonathan just said. In addition, I think there will be some very strong, very aggressive competition from new entrants into the market. As soon as you level a playing field, you allow new entrants to come in who will be using a very different cost paradigm. And they will be affecting everyone around this table right now. It'll be good for the market. It'll be good for customers. They'll have more choice. They will invariably be able to draw on the major institutions for their power processing, for their payment processing. But they will be specialist distributors targeting existing clients of the high street and the main street financial institutions. So 2 tracks at a macro level, and much more segmentation, much more specialization at a micro level.
Where do you see us a few years from now, Ruth?
Well, I would hope that finally the PSD effects would actually be manifest in the market, as well as the SEPA regulation giving clarity. I would concur. I mean, the whole idea is to get competition between banks at the right level, given that most of them hide behind national barriers and fragmentation. But also what we didn't touch upon is the whole non-bank sector, which is there to develop in parallel. So I think within banks we will have tougher competition, consolidation, and real strategic choices to say, I'm outsourcing the processing, I'm insourcing the processing, and then we have the value-added things of how making things e-invoicing, moving from paper to electronic in any conceivable way, and of course the mobile banking as a consumer sort of suggestion, as well as SMEs. But at the same time, we will see more non-bank competition and potentially non-banks hooking into banking processing, as they already do with PayPal and other providers. And I think that'll create a more interesting dynamic with more visible competition and different product sets out there, as opposed to just the theoretical talking about it. And I would hope that banks will also be able to get to the next level with SEPA e-payments and m-payments to at least have a standardized way of having different channels plugging into bank systems which are harmonized, and probably there will be non-banks also plugging into SEPA infrastructure in a slightly different way.
A banker who mentioned PayPal.
Well, I mean, they also have a bank license, so, I mean, they do use banking processing.
Yeah. So if I wanted to end with you, 2015, will we be finally having conversations about e-invoicing and mobile? Will be a real...
We will have a conversation about e-invoicing and mobile payments, but I want to draw it a little bit wider, because laying the foundation or sort of the basic network in terms of having the SEPA standards, SCT, SDD, and all that, yes, I think we will have it in 2015. Whether it's 80%, 90% of the market, or 91%, I think the move is clearly unreversible. But I think the important part, and we mentioned it earlier, that will still be lacking in 2015, arguably, is there will be still legal differences in different countries. That needs to be harmonized. There will be still things like certain statistic reporting, money laundering issues that are not harmonized in the market. On the other hand, we will see moves like the internet force even further harmonization in other parts of doing business and trade. And therefore, this is only a bit or one piece of a big puzzle that needs to be put in place, and I'm saying the earlier the better now, after such long discussions. But let's also understand this is only one piece in the puzzle. There is a greater puzzle where other proponents in the markets, in the whole SEPA discussion or the whole European discussion, have to put their pieces also onto the table in the right place. And then we will see a Europe that becomes more and more a harmonized market. We're still going to have different languages. It's a barrier. We have to accept that. So don't ask the banks to build Europe alone. They can't. Mm-hmm. But they can put that important puzzle piece in the right spot. Excellent. And that's what I hope 2015 will have happened.
Excellent. I'm going to thank the panel. Thank you very much. I think we could have talked for about 2 hours. I want to, on behalf of Finextra and Experian Payments, thank you very much.